Why the rich are buying Bitcoin? What if the people who understand money the most are quietly abandoning it? Not in public. Not on headlines. Not with announcements. But behind closed doors, through private funds, family offices, and billion-dollar portfolios, something is shifting. Because while most people are still debating whether Bitcoin is a scam, a bubble, or a gamble, the wealthy aren't debating anymore. They're buying. And not small amounts. We're talking about institutions moving billions, hedge funds reallocating, and some of the most powerful investors in the world quietly changing where they store their wealth. So, the real question isn't whether Bitcoin is risky. The real question is, what do they see that everyone else doesn't? If Bitcoin is so volatile, so unpredictable, and still widely misunderstood, why are the richest people on the planet moving toward it? Why would investors who have access to the best financial advice, insider-level data, and decades of experience choose something that many still call digital speculation? What are they preparing for? And more importantly, what do they know about the future of money that most people haven't realized yet? Because once you understand the answer, you don't just see Bitcoin differently. You start seeing the entire financial system differently. To understand what's happening, you have to zoom out. Way out. For decades, wealth has followed a familiar path. The rich store money in assets like real estate, stocks, bonds, and private businesses. These assets grow over time. They generate income. They're backed by systems people trust. But those systems have changed. Since the early 2000s, and especially after the 2008 financial crisis, something fundamental broke. Governments began printing money at unprecedented levels. Central banks lowered interest rates close to zero. And suddenly, cash stopped being a safe place to store wealth. Because when more money is created, each dollar becomes worth less. It doesn't happen overnight. It happens slowly, quietly, until one day you realize that everything costs more, but your money didn't grow. This is inflation. And for the wealthy, inflation isn't just an inconvenience. It's a silent tax. One that erodes millions, sometimes billions, over time. So, they adapted. They moved into assets that could outpace inflation. But then, another shift began. Bitcoin introduced something the world had never seen before. Absolute scarcity. Only 21 million will ever exist. No government can print more. No central bank can manipulate its supply. No politician can vote to change its rules. And for the first time in history, there was a form of money that couldn't be diluted. At first, it sounded crazy. Even the wealthy dismissed it. But over time, something changed. They started to notice a pattern. Every time more money was printed, Bitcoin surged. Every time trust in the financial system weakened, Bitcoin gained attention. It wasn't just speculation. It was a signal. A signal that people were looking for an escape from a system they no longer fully trusted. And the rich pay attention to signals. Because they don't just invest in what is. They invest in what's coming. But here's where things get interesting. The wealthy aren't buying Bitcoin because they believe in rebellion. They're buying it because they understand systems. And more importantly, they understand fragility. Traditional finance depends on layers of trust. Banks must remain solvent. Governments must manage debt. Currencies must maintain credibility. But what happens if any of those layers crack? History has an answer. Currencies collapse. Banks fail. Wealth disappears. Not hypothetically, but repeatedly, across different countries and different eras. And the rich study history more than most people realize. They know that no financial system lasts forever. So instead of asking, is Bitcoin perfect? They ask a different question. What happens if everything else isn't? At its core, Bitcoin offers three things the wealthy value more than almost anything else. Control, scarcity, and independence. Control means you don't need a bank to hold your wealth. No frozen accounts. No withdrawal limits. No middlemen deciding what you can or can't do with your money. Scarcity means your wealth can't be diluted. Unlike fiat currencies that can be printed endlessly, Bitcoin has a fixed supply. And as demand increases, there's only one direction that pressure can go. Independence means it exists outside traditional systems. It doesn't rely on a government. It doesn't depend on a central authority. It operates on a decentralized network that continues running, no matter what happens politically or economically. For the average person, these ideas sound abstract. But for the wealthy, they represent protection. Because when you have significant wealth, your biggest risk isn't losing money in the market. It's losing access. Losing control. Or watching your purchasing power slowly disappear. Bitcoin isn't just an investment to them. It's insurance. Insurance against inflation. Insurance against systemic failure. Insurance against uncertainty. And here's the part most people miss. They're not going all in. They're reallocating. Even a small percentage shift, say 1% to 5% of a massive portfolio, can represent billions of dollars flowing into Bitcoin. And that kind of movement changes everything. But this isn't a one-sided story. Because Bitcoin does come with real risks. Its price is volatile. It can rise rapidly and fall just as fast. Regulation is still evolving. Governments could impose restrictions, taxes, or new rules that impact adoption. There's also the risk of misunderstanding. Losing private keys. Falling for scams. Or entering the market without truly understanding what you're buying. And perhaps the biggest risk is timing. Because while the wealthy often think long-term, many everyday investors don't. They chase hype. They panic during downturns. They enter late and exit early, which leads to losses. So, while the rich may be buying, they're doing it strategically, patiently, with a clear understanding of why they're holding it in the first place. Not because it's trending, but because it fits into a bigger picture. So, what does this all mean? It means we may be witnessing the early stages of a shift. Not just in investments, but in the very idea of money itself. Because for centuries, money has always been controlled by centralized powers. Governments, banks, institutions. But Bitcoin challenges that. It introduces a system where trust is replaced by code, where value isn't dictated, but verified. And whether it succeeds or fails long-term, the fact that the world's wealthiest individuals are paying attention isn't random. It's a signal. A signal that something deeper is changing. So, the question isn't just, should you buy Bitcoin? The question is, what kind of world are we moving into? One where money continues to be printed endlessly, or one where scarcity, control, and independence redefine what wealth really means? Because if the people who understand money best are already positioning themselves, then maybe the real risk is ignoring why.